for Top That Trade with our favorite Christmas elves. Joining us for that is Phil Flynn, a Fox Business Network contributor, and Alan Neckman, the Chief Market Strategist for BullseyeOption.com. Round number one, taper upturn. Stocks surged after the Fed announced that it's reducing bond buybacks. Why is that good for the markets this time?
Well, it's so interesting. We had a taper tantrum years ago when we knew rates were going to rise, and they will again. But it's going to be so small, it's going to barely be felt. If you look at the 10-year yield right now, we're at 1.4%. Back in 1980, that was at 15%. So this is not 70s, 80s all over again. And I think this rate certainty is something the market liked to see.
And at the end of the day, I think the reason why is the market was actually anticipating that the Fed could be even more aggressive than they were. There was a lot of whisper numbers that the Fed was going to have to, get tapering done overnight. But the Fed said, listen, we're going to do this in a measured way. We're going to do it over a period of months. We know we're going to have to get there. And I think the market took that as a positive, and we went back up. And it shows you another thing, that maybe the economy is recovering a little bit faster, because that's usually what happens when you start raising rates. It's because the economy is getting too hot.
Round number two, metal mystery. Copper and silver have taken opposite directions this year. How do you play that for a profit?
I think right now, when you look at the copper market, we've had a substantial undersupply in copper. And the reason why we had a big correction in copper was concerns about the Chinese economy. We had the Evergrande scandal. They had defaulted on some loan. There were some concerns, but it was short-lived. Because at the end of the day, China's still stimulating their economy. That's going to keep the copper market high. Silver, on the other hand, it does have some industrial uses, but not like copper right now. And so it's more of a metal that you would use as a hedge against inflation. And to be honest with you, even though inflation has been an issue, the market's hedge against inflation has been in cryptocurrencies and other things. But I think from a value perspective, because of where copper is and where silver is, I think silver has some catching up to do.
Speaking of frustration, gold should explode. All of the things we've seen over the last months, gold should be much higher. It's finally trying to break out between 1750 and 1850 for 6 months. That spills over to silver. Silver's had a double bottom here. It was at $30 back in January. Right now it's in the $22, $23 level. It's been between 22 and 26. So that's making a nice bottom base here for a breakout.
Round number three, love stocks. Stocks friends love to recommend to friends is an interesting investment strategy that can beat the market. It does, however, ignore any financial metrics. What stocks do you love?
Very interesting strategy where you're picking stocks that would be recommend to your friends as far as great businesses and great services. So if you look in the history of some of these stocks, obviously Amazon and Apple are on this list, but at one time, Amazon had a market cap smaller than eBay, so it's had growth. One stock that's really popular right now among people and dogs is Chewy, cats as well. Chewy's made a bottom, new lows, but it's also got bullish divergence, meaning it's made new lows but not new highs volatility. That's usually a sign of bottom for me. And this stock is very, very well loved by people and animals.
Well, I'm from Chicago, and I know two companies that have just gone public that people love, and actually their stock market performance so far hasn't been good. And I think the reason is not a lot of people know these companies nationally. So the two companies I'm going to talk about is one of the favorite places the Chicagoans love to get their Chicago beefs. You know what I'm talking about?
Portillo's.
And, Portillo's, right. They just went public. They're going to expand. And when I look at, like In-N-Out Burger and some of these other places, I actually think Portillo is a much better run company. In fact, back in the 80s, the Japanese actually paid this company to go there and teach them how to do fast food. So I think this is going to be a sleeper. It's one you should put in your portfolio. The other one is Weber Kettles. Weber, they went public just recently. Their stock hasn't performed very good, but I like the Weber brand. It's going to be around for a long time. They do have a lot of competition, but if it's a stock you love, these are two that I know Chicago people love both of these things. And so I think over time, they're going to do very well.
For your bonus round question for today, Christmas ticker time. Tell me which ticker is not true. Is it snow, Noel, or tree?
I don't think Noel.
I'm going to say tree.
Winner, winner, chicken dinner for Alan. Alan, you are the winner this week. Great job today, guys. Merry Christmas. Business First AM continues right after this break.